Investors woke up to a bloodbath on Dalal Street today. The Indian stock market experienced a sharp and unexpected fall. This erased almost all the gains from Monday's rally. What happened? Let's break it down. It's important to remember that the market hates uncertainty. Today there was plenty of it. Weak global cues, particularly from the US, spooked investors. Add to that the looming US inflation data and you have a recipe for a sell-off. But it wasn't all doom and gloom. Some sectors showed resilience while others even posted gains. This tells us that investors are being selective. They're looking for safe havens in uncertain times. Stay tuned as we dive deeper into the day's action. Let's talk numbers. The Sensex, India's benchmark index, plummeted by 1.55% today, closing at 81,148.22. The Nifty 50, another key index, wasn't spared either, tumbling by 1.39% to end the day at 24,578.35. This broad-based sell-off was widespread. It impacted almost every sector of the market. Investors hit the sell button, taking profits off the table after Monday's exuberance. Remember, market movements are like a roller coaster. What goes up can come down, and vice versa. Today's decline doesn't necessarily signal a long-term trend. It's a reminder that volatility is part and parcel of investing. Now let's zoom in on specific sectors. The technology sector was the biggest loser of the day. The Nifty IT index tanked by a whopping 2.5%, dragged down by heavyweights like Infosys and LTIMindtree. On the flip side, the defense sector stood out as a beacon of strength. It soared by nearly 4%, fueled by the government's continued focus on bolstering India's defense capabilities. Companies like BDL, Bell, and HAL were among the top gainers. The media and pharma sectors also held their ground, demonstrating resilience in the face of the broader market downturn. This suggests that investors see value in these sectors, even during turbulent times. Amidst the sea of red, some stocks managed to shine. IFL Finance was a star performer, surging by 5% after receiving an upgrade to buy from HSBC. Cochin Shipyard also made waves, climbing 4% on news of a strategic collaboration with Drydocks World. MotoCorp revved higher, gaining 3% after reporting better-than-expected quarterly earnings. The company's strong performance is a testament to its brand appeal and robust demand in the two-wheeler segment. In the pharma space, Aurobindo and Glenmark were among the top gainers, each rising by about 3.5%. Positive developments in US policy, particularly regarding drug pricing, boosted investor sentiment towards these companies. Section 5. Feeling the heat, today's market losers. While some stocks basked in the limelight, others felt the heat. Infosys and Power Grid were among the major drags on the Nifty, contributing significantly to the index's decline. Tata Motors skidded by 2.01%, weighed down by muted expectations surrounding its upcoming quarterly results. The automaker is facing headwinds from rising input costs and supply chain disruptions. Bharti Airtel lost its signal, tumbling by 2.5% as investors fretted over the company's weak margin outlook. Intense competition in the telecom sector continues to squeeze margins, posing challenges for Airtel. Section 6. The global stage, inflation fears, and the Fed's next move. So, what's driving this market madness? Well, a lot of it has to do with what's happening globally. Investors are on edge about rising inflation in the US. They're eagerly awaiting the release of US inflation data, which could influence the Federal Reserve's next move on interest rates. Higher interest rates in the US could suck capital out of emerging markets like India. This is because investors are always seeking the best returns for their money. If US bonds offer higher yields, investors may pull money out of riskier assets like Indian stocks. The rupee's slight strengthening against the US dollar to 85.35 provided a sliver of good news. A stronger rupee makes Indian assets more attractive to foreign investors. However, it remains to be seen if this trend will hold. Section 7. Earnings season. A mixed bag of results. It's also earnings season in India, which always adds an element of volatility to the market. Companies are reporting their quarterly results, and investors are scrutinizing these reports to gauge the health of corporate India. MotoCorp's stellar performance provided some cheer, but other results have been less impressive. Tata Steel reported weak quarterly numbers, reflecting the challenges faced by the steel industry globally. PVR Inox, the multiplex giant, offered a mixed bag. While losses narrowed, revenue growth was muted. The company's performance reflects the evolving dynamics of the entertainment industry as consumers gradually return to cinemas after the pandemic. 8. Looking ahead, volatility and opportunity on the horizon. So, what's next for the Indian stock market? Volatility is likely to persist in the near term. Global factors like inflation and interest rates will continue to influence investor sentiment. Domestically, upcoming corporate earnings reports will also sway market direction. However, amidst the volatility, there are always opportunities for savvy investors. Sectors like defense, pharmaceuticals, and renewable energy are likely to remain resilient, driven by strong fundamentals and government support. Remember, investing is a marathon, not a sprint. Don't let short-term market fluctuations deter you from your long-term financial goals. Stay informed, stay invested, and as always, happy investing.
That's all for today's market wrap on Dalal Street Decode. If you found this update helpful, please like, share, and subscribe for more insights. Until next time, happy investing.